Welcome to the Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us. I totally appreciate it. Bobby, it's the black t-shirt thing again. It's happening again.
It's navy blue.
No, it's not. You can say whatever
Navy
you
blue.
want. You can call a cow a pig, and that doesn't make it a pig. That is a black t-shirt. And I'm okay with it.
I'm not wearing your glasses. This is navy blue.
Okay, fine. Everybody who's watching, let's just appease Bobby and say that's a very pretty navy blue shirt. Okay, so we've had a Fed that actually eased and opened the door for October since the last time we talked. Okay, so what does that mean? What are the ramifications of that?
Well, it's interesting. So something that struck me when Powell spoke yesterday, he explained that they decided to go to more of a neutral stance, and that's why they cut. That was the biggest thing that struck me yesterday. A neutral stance. So that means that he thought they were restrictive. Mm-hmm. And I thought it was strange. I don't think he's said that before. I think he was saying that, basically they were at neutral at that point. So it seems to me that he's now accepting that the neutral rate was lower. Right. I think there is some concern with inflation still above 2%, but also if you remember about I call it 3.5 years back, he talked about needing inflation to run above 2% for quite some time because it had run below. He called it an adjusted average. And at the time I was like, what the hell's an adjusted average? I don't know what that is.
Yeah.
So is that what this is? I certainly don't think the economy is in trouble, but it's slowing. So I'm okay with the one cut. I'm not necessarily okay with the 4 cuts being priced in through June of 2026.
You know what I'm not okay with? So Donald Trump appoints, his name's Stephen Mirren, right? That's the guy's name. And did you hear the very eloquent speech he gave where he really bent over backwards to show mathematical equations and inputs of why he's dovish? Okay, let's break that down for a second because it's really kind of infuriating. Much of the math he's talking about is about government data that we all know is somewhere between corrupted and worthless. And we've known that for several years. The response rate for these numbers has been ridiculous. So he's banking on that and acting like it's some sort of gospel. And every one of these other inputs to make it seem like a math equation ignores the fact that it is absolutely such a chaotic system that it's very, very difficult to predict. He can come out and say, well, and for these reasons, I'm dovish. It's just as valuable to me to say I'm dovish because the president told me to be dovish. I don't really understand what he's trying to get at. Does that make sense?
Yeah, I mean, I think he's clearly vying for the Fed chairmanship. I think there's no other way to look at it. This is not a good look for this administration, in my view. They would have actually nominated somebody and not necessarily like shoved him through the way they did. That obviously is to increase pressure on Fed Chair Powell. I'm not in love with that kind of an attitude toward the central bank, but I'm not in love with the central bank. So who gives a shit?
So if we're going to bring in our guest now, but what I was going to say is that if there's 2.7% inflation, we're putting more dovish people on the Fed that's easing anyway. Certainly not time to sell stocks yet, in my opinion. It's like, boom, the party's going on. There should be streamers. Let's bring in our guest. We have our special friend, special guest. We have Kevin Lutheringhausen, known as Lex from Tradier. Let's bring him on. Kevin, do you take naps during the day ever?
I just woke up from one about 20 minutes ago.
So did I. That is
so Is it because of I'm wearing a hat and my hair's a mess? Because I wear a mask to take my nap.
I love it because when the bond market closes, generally, if I'm working from home, which is about half the time, and there's a bed right over there, I sit down, I do like one of those guided meditations. But then sometimes it is hard to wake up. So I just pounded a cup of coffee, and in about 5 minutes, there's going to be a huge surge. But right now, it's manufactured. How's everything else?
Everything's good. I will say the nap is a big part of my day ever since I hit a certain age.
Yeah. And when I married into my wife's family, is there really these hardworking Polish people? And I remember my father-in-law, like, I don't nap. I hate naps. That's when I started taking naps. The second I knew my father-in-law hated them and thought they were lazy people's way, I started taking naps. So, Bobby?
By the way, Bob's shirt does look black, but I can see the blue.
No, you can't. You're lying just like lights.
This is about the most blue shirt I own. Okay. Just for the record. I bought it because it was navy blue and looked black.
Okay.
So now I could actually diversify my color palette while still being as Italian as I could possibly be.
I like it. I like it.
I don't understand why naps stopped being a thing.
Me neither.
I mean, like they put you to bed when you're a kid and you go to bed for a couple hours and you wake up happy and ready to eat. Why did they ever stop?
Yeah, I think it makes sense because right now, like I was saying, I'm feeling good. I'll get another slight workout in when this is all done, and all because of that nap. Okay, you guys, sometimes we talk about markets on this show. Does anyone any objection to that or no? So, okay, one of the things, and you guys mentioned in the Tradier rundown too, something that is stuck in my crop, which by the way, we are going to need to figure out as investors, as traders around, and that is more and more government corporatism. So what I mean by that is this. So just today, Google, it turns out, oh gosh, we're all surprised. Google, the government was leaning on YouTube to silence some conservative shows. We all knew that. Now it is common knowledge. Jim Jordan came out and said those guys should all be reinstated. I disagree. I think they should all be reinstated with any sort of back pay that they may have missed. The government takes over a stake in Intel. The government takes a stake in a mining company. The government may or may not be influencing the Jimmy Kimmel thing by putting pressure on Sinclair and Nexstar to do these kind of things in order to get approval from a merger. Where do you fall on all this corporatist bullshit? Not to lead the witness.
Yeah. Not to lead the witness. I think I know where you fall on it. Although I will say I did read your tweet about the Google thing, and I copy pasted that and sent it to some friends. What a shocker that the Biden administration was pressuring Google to sort of sift through some of the things that were being said there. Shocker. I don't like the government being involved in my stuff at all. I really don't. Now, I lived through Bear Stearns and I lived through that horrible crash way back when, right? It looked like the whole world was going to fail. Is there ever an opportunity in a situation like that where something that's too big to fail is failing and you prop it up? I don't know, man. I think
this brings up an interesting question. Okay, when we bailed out the banks, were you for the bailout or against the bailout?
I was so scared to death that the world was coming to it. I think I might have been for it. I really did.
I was for it too. And by the way, I still go over it and say, because the government had kind of created the environment that led the banks to the cliff, leaned the banks over the cliff, it would have been a hell of a time to say, oh, hey, now you guys are on your own. That would have been total bullshit. I was for the bailouts. But anyway, continue. I didn't mean to interrupt you.
No, I'm 100% with you on that one. Looking back, I think it was probably the right thing. Does it make sense to get into Intel's bag of worms or Boeing's bag of worms for that matter? I don't think so. Unless someone can make a great case for me that we absolutely need that as an infrastructure play to make the country keep clicking. But I don't see that at this point.
Here's what bothers me about the bailouts, guys. I was for the bailouts too, for the same reason Lex just said. I was afraid everything was just burning, right? The problem I have with the bailouts is bailouts should come with prison for somebody. They really should.
I agree.
I mean, there was fraud in the mortgage industry. There was. I mean, I don't know who committed it, but there were too many stories about it. It should. I mean, you tell me nobody at Countrywide went to jail? Nobody?
Well, he died, right? Crazy. Angelo Mazzillo. Yeah, he died before he could even answer for it, I don't think. But
yeah, I mean, I'm not sure if it should have been Mazzillo specifically. Maybe it should have, maybe it shouldn't have. I don't know. But they should. Bailout should come with prison. So guys should be like, look, do you want to be responsible in history for what's about to happen? Or do you want us to bail out the institution and you spend 6 months in federal prison playing tennis?
Do you guys remember what Repo 105 was?
No.
So, okay, bank regulators every periodically, which by the way, periodically, we're going to talk about reporting soon. Thank you, Widge, for saying preach. But bank regulators from the government come in and go over a bank's books and then give them a grading. I don't know how often it is, but it was legal for a bank. Let's say you held, you know, a $10 billion worth of those mortgage-backed bullshit loans. But since I think the purple background makes it look, oh, thanks, Doug, for backstabbing me on this. But I like your purple background of your icon. Doug, we're not friends anymore. I'm right here. So Repo 105, the regulators come in. It was legal for a bank. Let's say JP Morgan had $10 billion worth of those bullshit mortgage backs that were AAA rated. You could swap a AAA rated security with another bank for a time period. So they would swap those mortgage backs with AAA rated treasuries, have them on their books for when the regulators came in, because it was announced at a time. They'd look over their books and say, yeah, this bank looks stable as hell. They have a bunch of U.S. treasuries. As soon as the bank regulator would leave, they'd swap them back for the bullshit mortgage backs. That was legal. So now I think I look at that sort of tomfoolery. By the way, I want to use tomfoolery more. I look at that that sort of tomfoolery and think someone should go to jail, but technically it's not legal. Where do you fall on that, Lex?
Oh, I don't know. I mean, I think so. I'm going to agree with you guys. Someone should go to jail. Someone's head should roll on this stuff.
Yeah.
And but it never happens that way. So they always get out the back exit, the revolving door, and they walk away. And you know what? We go down the Mary Primrose path and we make the same mistake again. Or I shouldn't say that. The same mistake, little different version of the same mistake. Mm-hmm. Right? And until someone's, it's just like snatch and grab. If you're not going to put people in jail, they're going to keep doing it. They're just going to, it's going to keep happening. Well, my little kid, when he was a little kid, he got punished. Guess what? It's a great deterrent. It really is.
Doing the bullshit.
Yep.
Yeah. So, Lex, do you think that the Fed's cut that we just saw, is that somewhat of a too big to fail for the economy? Now, obviously, the housing market, Tim said regulators usually come into the regional banks once a year for a cursory review. Deep probe is about every 3 years. It's good to know.
Timmy.
I look at this past cut. Okay, I understand the potential weakness in the job market, but I also think the weakness in the job market could potentially be structural, as opposed to a sign of a slowing economy. If we looked at the small to business PMIs that we just got across the globe, they were lower than expected. They were lower than expected. Germany, the EU, the UK, Japan, the US. As a matter of fact, I think the US, don't quote me on this, Japan might have been the other one. I think the US and Japan were the only ones that remained in expansion territory. There's a slowing. So do you think that what we saw and what we may see over the next few months with the Fed is somewhat of a bailout, or are they going to actually let an economy go into recession as they used to?
That's a good question. The thing that kind of gives me a little bit of a wrinkle in the whole equation here is this burgeoning AI automation economy. I'm gonna call it an economy because I think that whole piece is going to change employment as we know it. Now, is it going to replace you and me and most people? Probably not, but it's going to make things very efficient to the point where we might not need as much of it. So now what? And I think it's what I'm seeing on our side of the business is it's happening so fast in the trading part of the business that I can't keep up with it. It's insane what's happening with technology, and anything that we see in the marketplace now is .ai, everything. And my workflow, if I'm doing it as a manual person, I'm like a freaking Model T kind of thing.
So then a follow-up would be, and this is not necessarily a binary question, this is for both of you.
I'm trading my hat.
Do you think .ai is the same as .com from the 90s? In other words, everybody just put .com on their name and their stock went up and then eventually the whole thing dumped? Or do you think that maybe 30 to 40,000 non-farm payrolls a month is going to be normal at some point? This is for both of you, but Lex first.
I'll take it first then.
Yeah,
Lex.
you take it first, Jim.
Yeah, because Jim Bianco has written extensively on this, and I don't like to disagree with it. I'm starting to agree with him more. And his contention is that in a world where we are not growing the population anymore, remember, we were growing the population quite a bit. Everyone likes to say and think that everyone coming over the southern border had no skills, and we were just taking them in to pay the Medicare. And that was not 100% correct. They were filling jobs as well. Everybody is right and everybody is wrong in this. They were filling jobs, and now they're not. So our population isn't growing. So could it be that our economy needs 25 to 30,000 jobs a month to be at equilibrium where it used to be at 100? Maybe the answer to that is yes. Now you throw the AI portion of that, which again, this AI thing, I think the ground is shifting under our feet so quickly, and it's somewhat terrifying to me. And I will also, and I've said this before on the show, and I'll say it again, is I think wherever you think AI is, it's 2 years further, actually, because it's one thing for B of A to be reporting that they're replacing 1,000 HR workers with AI and hope their stock prices go up. But all these little non-publicly traded companies are using AI. Lawyers are using it. Accountants are using it. And they're not telling people as loudly because they don't want to make themselves redundant. So I think AI is grabbing a huge foothold, and how we make money on it. I think the easy part to do it was to buy NVIDIA and to buy AMD and Micron. But now there's going to be a tier 2 investment phase that I want to talk about too. But where are you on it, Lex, first before we talk about that?
That's interesting because we did a little piece on the talk of the H-1B visa, right? And when that news came out, I think it came from the Trump administration, I'm assuming, but that looked kind of terrible for this tech stocks. And within a day, they said, what? Wipe that off and rally to the moon, right? Especially the tech sector. Mm-hmm. So I was like, wow, that was kind of a tell a little bit to me, at least a short-term tell for now.
It was a flex, right?
It was a goddamn flex. I agree. Yeah. So man, I don't know. Are non-farms going to be 20,000? Are they going to be 10,000? It's just nuts. I don't know. I really don't.
Yeah, I think that was interesting too, Lex. The HB1 visa program, first of all, it drove me crazy. All the, I don't want to use this word. I almost said misinformation. What's a better word?
Use that word. That word.
All the incorrect information as per the proposal that was out there, that it was a recurring annual fee and that small companies wouldn't be able to pay it and all this stuff. But I thought it was actually a good move. Because our friend Tony Nash, who he's been on this show with us a couple of times.
Yeah.
And he's been on our podcast as well. He has a small AI company in Texas. And he said he's hiring American kids from the universities, the local universities, and he's paying them American level wages, and they're doing great. And the company is doing well with them. So making it harder for, the big complaint, Kevin O'Leary was one who was out there complaining publicly that this is going to cripple companies who can't find tech graduates. I think most kids who are encouraged to go to college that'll be coming out and that have come out now and then coming out in the next few years know that if they didn't go technology, they're going to struggle. They're going to be a Starbucks barista.
Yeah, let me give you a little stat on that. So, as you know, our brokerage firm, one of our key offerings is the API space, right? So we provide an API to a technology sort of entity or person, so that entity or person could create an automated or digital workflow, right? So our age level, I didn't come out of school with any sort of background in coding or anything like that. I have no idea. What a guy my age told me on a call is that he took our code, right, our documentation, put it in ChatGPT, gave it the query that he wanted to have it perform, and it spit out the exact code. He pumped it into his trading account, and he works with that workflow automatically. First of all, that's brilliant. Second of all, our generation doesn't have that skill. I still talk to a lot of college-age kids when I travel and speak at these forums. There isn't a kid out of the womb who doesn't know how to code and deal with technology at a very, very, sufficient level and efficient level right out of school. So, I mean, my goodness, we're not going farther away from that sort of automation. The Gen Zers of the world, you kidding me? They're on this stupid phone all day long and they can code anything. Their lives. Yeah.
Oh, sorry. Something just dawned on me too. Is that because when I heard the H1, because Bobby and I both grew up in immigrant households. I am pro immigration, particularly when it's immigrants of a certain skill set and a certain work ethic, which generally speaking, the H1B1, what's the symbol for it? Whatever it is. You guys know what I'm talking about. So I was kind of against it. Now, that being said, I have a nephew who graduated in computer science, and we've never seen anything like how 3 years ago, might be getting the time frames a little wrong, there was a thirst for adding technology to these companies that couldn't be satisfied. Then all of a sudden they overhired and AI came out, which was replacing some of the work. So it kind of quelled the need a little bit too. So now all of a sudden, if this pushes it more towards domestically born kids, workers, there's a benefit to that. Just because I'm against it doesn't mean we might not benefit from it. Everything, Thomas Sowell, there's no solutions, there are only trade-offs. That's a pretty interesting and good trade-off. So maybe at the end of the day, it will make us stronger as a country, but I hate pushing away the brightest. Again, my daughter went to University of Illinois. It's 30%. It's about one of the best engineering schools in the country. And it's 30% Asian and Indian to come in and compete. I liked that competitive forum for my daughter to be in.
Yeah. I agree with that. How do you, am I allowed to ask questions too, or am I just a guest?
No, you're not. What do you mean? Yeah.
Well, I mean, this is my little segue, I think, into something. I don't know where it goes, but I think our friend Charlie would argue against college at large, for certain things. And I've thought about that a lot. I don't know how I feel. In the old days, I said, hey, college is a good place to go. It's sort of your little party pass to get in the door. Does it mean that you're the smartest person in the world or you're going to get the greatest job coming out of a great school? Not necessarily. Certain opportunities may be open to you from a great school or not, but it doesn't mean that's a definition of being wealthy and set in life. It's interesting to see with this technology bias and bent that maybe the college, level curriculum isn't necessarily what we thought it was. I don't know.
I just talked to a friend of mine about exactly what you just said. But first, I want to put up Widge's comment real quick because this applies to the HB1 again. Widge says the first time, where is that comment? The first time I had the H1B visa program described to me by someone who used it, what he described to me was indentured servitude. This, I think, is why you have the Kevin O'Leary's of the world. And I hate to pick on Kevin, but he's the only one I saw.
No, I don't like him. I know him and I don't like him. You can pick on him.
Yeah, I know him too. Too. And when he said that to me, and Widge's point is well taken here. I don't think we're shutting the door to the best and brightest. I think we're opening the door for the brightest native U.S. citizens. Mm-hmm. And to me, it should be that if you have someone from another country, like it used to be stated, you have someone from another country who fits what you want to do at the same level as a U.S. person, you should be able to sponsor them for citizenship or a green card, not an H1B. You should be able to just bring them in and make them a citizen if that's what they want, because it should be a competition for meritocracy, for merit, not for the H1B visa students being cheaper, which is what has been the case. And to Lex's point, the college thing, the liberal arts degree, to me is dead. I was just talking to a friend of mine who has a son who graduated from Indiana University, good school, right? And he says that my son is constantly saying, what's the point? What's the point? If I had a kid like that, I'd be like, look, if you were of college age, I'd say like, look, you can either go to college, go have that experience, go ahead, but you're going to be on your own after that. Or I will help you buy a franchise of your choice. Or I will help you go to a trade school, which I believe computer skills are going to be trade schools at this point. Why do you have to go to college for that? Right. And I told him, I said, have your kid buy a franchise. By the time he's my age, you could own 20 of them. AI is not going to be eating my food for me, right?
Not so fast, Bobby.
Not so fast. What's the guy? Oh, Lee Corso, he just retired. Here's what I disagree with about that is that I think college has long been, particularly at elite universities, particularly in their business schools, has been a networking opportunity for people. So I think if your kids, but the problem is that's when it was costing, $40,000 for 4 years of school. Now to go to Notre Dame and to be in the Mendoza School of Business or MIT Business costs probably $350,000 a year. So there's a point in time where is that networking opportunity worth it? Well, it's certainly worth something. I'm not sure if you go to Western Illinois and get a liberal arts degree, you're making some sort of network that's going to shake the world at any point in time. By the way, I shouldn't have even said that. I'm fine with Western Illinois University. I apologize for that. I do think that elite universities, you meet the people who are coming out and starting the companies, and through that, because you threw up on a Friday night after happy hour with them on the side of a bar, there becomes a bond, and you become, they call you when they build their company.
That's not necessarily meritocracy, Jimmy.
No, but it's networking, it's reality, right?
That's who you know. So I'm saying that, I think that's dying. I really do.
Okay, but
because it's like you're not necessarily getting the best attorney out of Harvard anymore. You're just not.
I know, but who has always been a huge component.
Yeah, but that's dying. It's dying because
I hope you're right.
I think you have the entrepreneurial spirit is what's causing things now. What are you going to do? I mean, you're going to get a job from somebody you knew at a college party who you threw up on, which I've done that, right? I've done,
and I have gotten a job from that
once
guy
on the trading floor when you were standing below me. From that perspective, I think that's dying because I think the people are starting businesses through AI, right? They're not necessarily going the corporate route through people they know at college anymore, because those are the jobs that I think AI are going to eliminate. Personally.
Yeah, here's what I think. If we're going to bring it back to a trading kind of concept, is that, implied volatility. Jim, you said it really well. I went to one of those schools you mentioned along the way. I'm a graduate of one of those, and it's it's a fancy school. It's not an Ivy League school, but it's pretty fancy. And I think I didn't have any money to pay for it. My dad probably paid $8,000 a year for me to go there. That same school is got to be the 100,000 plus now. So implied volatility has gone straight up for college education. Now, I don't think the quality of education has gone straight up commensurate to that price, right? And that's what really bothers me about it. Further, to Bobby's point, there's a whole lot of learning that can be done at a trade school. There's a whole lot of learning that can be done in other places. We have this unbelievable, internet economy now too, or social media economy that's just amazing. To Jim's point, I love the experience for a young kid who's 18 when they go to school, I guess thereabouts. Get your ass out there and try it on your own. I know mommy and daddy still have a little noose on your back, but you got to learn how to manage your life a little bit at start without mom and dad pushing it along. That part I love about it. That experience is good. Don't deny the fact that there's some networking ability either. I think that's important too. I made some of the greatest connections at school that I still have to this day, which is good. But is it the definition of why I'm spending the money? Not really. I think there's a lot of things that go into it. Would I send my kid to school, a college, if he wanted to? Sure. I did send them to both of them to great schools, but did it make a difference in what they're doing today? Maybe. I don't see it because of the critical thinking part, but they're doing just fine whether they won or not, I think.
A quick question to you, and I do want to wind it back to Marcus. Let's say you had a kid who was a low B student. You knew that this kid was smarter than they were in high school. So they couldn't get into any of the top line universities. And you thought it was a waste to send him to an expensive private one, but the kid wasn't that serious student. Would you have sent your kid for 2 years to the local junior college that's just down the street from us and tell him to get his act together and then go to the 4-year?
Yes.
Yeah, so would I have, I think,
I
too.
would.
I tried to get one of my brothers to do that with their well, whatever. But I won't say that too much.
Listen, I'm meeting more and more people who go to that school that you just said. I'm not sure we can allowed to say that school, but it's a great starting place for people.
And the only reason we can't say the school is not because of the school's privacy, is because Lex and I both live within a stone's throw from the school.
Yeah, we don't want
to know the exact school you're talking about.
Yes.
Yeah, I spent a year at Triton College before I went to Dominican University. So I said it because you guys don't live near there.
Yeah, right.
But I spent a year there, and I still have friends from university. None of them ended up being connections for me. And so, we're kind of arguing a negative here, which is something that Tim just did in the comments. He's responding to Widge. He said, Widge, Elon Musk, Satya Nadella, Sundar Pichai all used the HB-1B visa to enter the U.S. But that doesn't mean they couldn't have gotten in a different way. So this to me is arguing a negative, right? And then he wants us to read Breakneck by Dan Wang. But that doesn't mean I'm going to believe Dan Wang just because he wrote a book. But I do like this comment Tim put here. China is run by engineers. America is run by attorneys. And I think that's one of the biggest problems. And a lot of those come out of these elite universities. But then Widge put down here, and it wasn't a response to Tim, because I honestly don't know if they can see each other's comments in here. I'll have to ask Luis later. Widge said, the greatest trade schools provide paychecks. Those who educate their employees demand their employees become proficient immediately. That's what I like about the trade schools, is you could actually get a plumber. And Jimmy, we talked to Luke Roman about this a long time ago. He's going to be on the show in a couple of weeks, by the way. But Luke Roman told us that we're entering an age where plumbers make more than managing directors at Morgan Stanley.
Will make more. Yeah, right.
Yeah, we're going to enter that age. We're not there yet. But I thought that was a great comment. And again, the advice that I gave, I don't have kids, so it's easy for me to say this, right? But the advice I gave my friend was like, look, tell your son, buy a franchise. There's other ways to get rich other than the prestige of the elite university. And I think the elite university prestige has been severely damaged.
Hell yes.
Yes, I agree too.
And by the way, Kev, I'm going to throw something else to you too. I know you went to a private school. I went to a public school, but we're both, that's long in history, and everything's changed since then. Yep. I actually think sending kids to a public school, because you talked about a young man who goes to school and doesn't have his parents. I actually think it's almost better at this stage, particularly when you get kids who aren't as independent as we were, to go to public school where no one gives a shit if they stay in school or not. The private schools sometimes coddle a little bit, not one as big as the one you went to, but some of the smaller ones. I think they coddle a bit. I like the public schools. I'd rather hire a kid from Michigan than hire a kid from Harvard. What do you think?
Yeah, I don't know how I feel about that one. I think listen, the only reason I go to private is for a religious reason. That's it.
Yeah.
That's the only reason.
I like that reason. Yeah.
I wanted my kids to be around, the Catholic Christian faith, and that was the main reason. It wasn't because it was private per se. It was because it was religious. That's it. And I know
take a quick time out. Luis, will you put up the banner? You guys who watch the show know what I'm going to say now, and we appreciate all the support you give us on the show. If you want to take that support a step further, please try Tradier Pro for 3 months. We talk to options traders who have been trading options for decades and novices, and they all say the same thing about Tradier Pro, that it is the deal. You won't be sorry. Again, scan the code, 3 months for Tradier Pro. Thank you guys so much for your support. Commercial's over.
Can I add to the commercial real quick?
Absolutely, You can.
Just because I'm here, if you do that, scan that code, and you take on Tradier Pro, you can do a private online demo with moi anytime you want. And guess what? I'm going to give you my email now, lex@tradier.com. You can set it up that way. Send me an email. I will get you running like you can't believe on that platform.
We're going to repeat that email 100 times this year.
Do it. I love getting emails.
Good. Yeah. Also, if you want, I'll take you right to Lex's house. We'll knock on it any time of day.
Anytime you want. And Bobby will be in the bar having a whiskey late at night, right?
Lex will come out in his bathrobe. We'll, oh, yeah, it's time for it. Yeah.
Yeah, depending on the time, Jimmy will knock on the door and then take off. I'll be in there.
Run away like I always do.
The Irish goodbye. I love it.
My friends bought me a shirt that says the Irish goodbye, which I have perfected. Yeah.
Lex, we know you got to go, but I want to ask you a quick question about markets, if I could, from the options perspective, which is what you specialize in. Yep. 0 days to expiration.
Okay.
We talked about this last time that we were all on a call, and I want to see if your opinions changed on it at all.
Okay. What about it in particular? Anything specific?
Do you think it's damaging to the markets, helpful to the markets? Do you think it's good for exchanges, good for brokers, good for traders? I just want your overall opinion on it.
So there's a lot of different little facets of it, right? The dealer community, the professionals, the market makers, they love it. It's very easy to hedge themselves in the space. Some of them have probably divided that up into its own little product group, and they hedge it within itself. Others have probably taken that as a cheap way to buy premium and gamma to hedge other risks, so they can do that cheaply. I don't think it's a Volmageddon. That's another story or another show. It's a little bit longer explanation. I think for volume's sake, it's been ginormous. So I was at SIBO the other day doing a show on the floor in SPX, and the latest number is that 0 DTEs are now 51% of all of SPX volume, which is crazy. Okay, now doesn't mean that volume moved from back months to the front month. That's additive volume, 51%. So that's just a gigantic number, right? So they've increased their volume, their daily volume by a huge number. Also, another stat there is that I can't remember the exact number. Let's say 96% of all 0 DTE volume in SPX. I deal with SPX a lot, so that's why I'm saying that so much. Is transacted electronically. Okay, 0 open outcry essentially. You know what that means? There's a lot of retail people playing that. Okay, so back now to the retail part. Is it good for them or not? I am not very good at 0 DTE. Okay, it just doesn't fit my personality.
Yeah, I'm not either.
And that means that I'm not good at shaking and baking daily, and I'm too much of an emotional wizard. I'd rather put something on. I'll call it the swing trading dynamic, which is, let's call it 10 to 30 days. I've got a thesis. I want the thesis to play out. It's going to wiggle, it's going to waggle, and it's going to make its move. And if I'm right, I'm going to get myself. CLDT, I don't have a lot of wiggling and waggling. It feels I'm getting slapped in the face, most of the time. So for me, I don't like it. Retail has figured out a way to get into that market in an automated way with all these new automated, workflows and protect themselves, which is amazing. And there's another great stat, and I'll leave you with this, is that SIBO did an analysis, and it's amazing when there's spikes in order flow in 0 DT. It happens at, I'll just make up the numbers, right? 10 o'clock, 10:15, 10:30, 10:45, 11 o'clock, 11:15, and it's systematic. You can see spikes in volume. You know what that is? It's all the automation, either closing or opening trades at very specific times in 15-minute.
Wow.
It was uncanny how crazy this looked on a graph.
So the follow-up question to
Yeah.
that for me is, do you see a massive difference theoretically between 0 DTE and event contracts? And because event contracts are becoming really popular,
Yeah.
and they're sort of binary. Now, I know 0 DTE aren't necessarily binary,
Yeah.
but you can get in and out of event contracts on a day-to-day basis too.
Yep.
And then I like Doug's comment here. I just want to read it.
Yep.
Doug says it's the old nickel in front of a steamroller. It works great until it doesn't. Do you
couldn't-
think that massive volume on 0 DTEs is going to, and this for you too, Jimmy, is that if there's ever an event that crushes a ton of these people, are they out of the markets forever? Like we saw in the 87 crash, like we saw in the 90s crash, like we saw after the great financial crisis, entire generations of people
Yep.
said this market is rigged because they didn't know how to manage their risk.
Yeah, so let me answer first, only because what I see, at a very granular level relative to the retail side of the equation, I think those are the ones that get blown out as opposed to a dealer or entity, right? Is that it's so risk defined that their maximum number of their maximum value of pain is defined as something they can handle. Now, if your question is if that happens day 1, day 2, day 3, day 4, day 5, do they get out? Okay, 5 days in a row, 7 days in a row, maybe they say uncle for a little while, but they're not getting blown out from what I can tell on any one trade. It's not a sell a strangle and let's see how it goes with no protection. It's very, very risk defined. So the graph looks like this with wings on it that flatten it out, right? They can certainly lose, but not infinity.
So can I answer real quick? Because I want to see what Lex says about my answer before you run away. Because on the retail level, we've always kind of characterized the retail trader as the dumb money that's going to get wiped out. These 0 days to expiration options, I'm not sure that model is the same anymore. Because like Lex said, they're usually buying calls and puts to take advantage of one-day moves. That's actually quite smart to me. As far as the massive buildup of positions and how it could systemically affect the market structure, I think it affects it in a good way. Bear with me, if you will. We believe that bear markets, huge corrections happen because of lack of volatility and lack of respect for risk. Now, I think the 0 days to expiration could cause tremendous one-day volatility, but that might borrow from just months and months of lack of appreciation of risk and may keep us from the big one. Did I make sense with that, Lex, or no?
Yeah, you did. And I think I mentioned something similar. I think we're saying the same thing, and I might be saying it like this, and you're saying it like this. But what the 0 DTE does for the dealer who has to inventory all this stuff is it allows them to go grab things that they may need to mitigate that gigantic risk exposure. And they can do it day in and day out if they need to, because there is so much volume in these things. And don't forget, we haven't even touched 0 DTE in the Mag 7 or the equities yet, right? That hasn't even happened. That's another different animal altogether, because now you have settlement issues. SPX settles in cash, right? So wait till that comes. That all of a sudden becomes a different beast all of a sudden.
Yeah, because you have to settle them in cash.
Well, that's another argument, and I know that the SEC and the regulators have heard that argument before. Why don't we have cash settled stocks? Now, obviously, Tesla doesn't want you to have that issue, right? The company,
right?
They want you to own their stock.
It's fascinating.
Yeah, it is. It's what's happening in the market structure right now is just amazing. As a matter of fact, in a couple weeks, I'm flying to Washington D.C. to sit at a Securities Traders Association meeting with all these regulators and listen to what's being proposed and that sort of thing. So I might have some info for you.
Good. All right. We've already kept you longer than we promised. I feel guilty now.
No.
You got work to do. You got mountains to climb.
Mountains to
Worlds
climb.
shake.
Yeah,
see you, brother. So good to see you as always.
Yeah. Thanks for having me, guys. Good to see you. So we'll talk later.
Thanks.
Later. Bye.
Bobby, let's wind it back. Which, by the way, that was some interesting stuff. I love Lex. But let's wind it back to, I didn't hear you when you just said something, by the way. Are you muted?
Oh, no, I just said he's a great guy, but I mumbled it.
Oh, you mumbled it. Okay, let's talk about, we talked about AI a ton. I personally believe that I own NVIDIA, I own AMD, I own Micron, and I'm not going to give those up. But I think the juice is largely out of the orange. You know, about 2 months ago, I started buying nuclear more. Or how did George Bush say it? Nuclear?
Nuclear.
I'm going to say nuclear from now on. So I started buying nuclear. And I think that's the second derivative play of AI. Ron DeSantis gave a speech last week about how the power grid, the power sources, we're not prepared for all these lofty goals we have for AI. Where do you think the next gen investing in AI is?
That's a good question. To be honest, I've been more focused on the next sell-off in the overall markets, which I kind of feel is coming.
Okay.
I don't feel it's a big one. And if we got it, I'd think I'd still go into traditional AI. But I wrote a couple weeks back in our newsletter. I don't know if you got a chance to see it because I think I put it in after I sent it for you to proofread about the Case-Shiller ratio, right? Which is the cyclically adjusted price to earnings ratio, and how it's at the second highest that it's ever been, about 39.5. Dot-com bubbles peak, it was at 44. And it's a different way of looking at PE, and it coincides with seasonal weakness. Now, our friend Mike Singleton did a really nice piece a couple of days ago about how seasonality is weak for this time of year. But when you look at markets that have outperformed or performed positively during this seasonally weak period, the next 3 months, we get about a 5% jump minimum with about a 74% win probability, and it is statistically significant. So I'm
Can you
curious.
say it one more time so I can get it again? Can you say it one more time? The statistic.
If we have a positive market during this weak period,
which when does the weak period end? Mid-October?
Yeah, October options expiration, if we want to be specific. So whenever that is. If we get a positive S&P through that period, we get about a 5% positive return, so over and above the average for the next quarter, with about a 74% win rate, and the T-stats over 2%, which means it's statistically significant.
Sure.
So I've been sort of looking at that. Now, in terms of the next AI play, I don't know. I mean, I still think it's chips. I think it's the competitors to NVIDIA. And that's what I'd be looking for a burst in, but that's really not my area. So I don't really know how to find those. One of the things I've still looked at, and you've mentioned this before in our shows, is I'm waiting for small caps to make that catch up. And I think the small cap is going to catch up in tech and specifically in biotech. So those are some of the things I've been looking for after this particular sell-off, if it comes. If it doesn't come, I'm backing up the truck in about the middle of October.
Interesting. Okay. I have, and you guys know who read the newsletter, unfilteredinvestor.com, that I've increased my put position. I like to sleep soundly at night. This is a seasonally weak period. We've made a Herculean run off those April 2nd lows or April 4th lows, whatever the hell they were.
Herculean?
What's that?
Herculean or Herculean?
Herculean, isn't that? Did I say Herculean?
Yeah. Is it Herculean?
I thought it was Herculean.
It could be.
Well, our next show will just all be about the pronunciation of Herculean or Herculean. But it's made a really big run off the April 4th lows. I think, as we say in the trading world, bulls can make money, bears can make money, pigs get slaughtered. If you've done as well as most of us have, I personally think you're supposed to take some chips off the table. And if you do that in the form of options instead of having any sort of tax ramifications, more power to you. What else do you want to talk about?
I got 2 comments from its stock charts, which is
Remo. Yeah.
Remo that I want to put up. Number 1, he said, agree, Bob, market needs a pullback, overextended. But we have to agree, Jimmy, right? That just because it needs it doesn't mean it'll come.
Doesn't mean it'll happen, right?
Okay. Then the next one I like because it's a question. Thoughts on the energy sector, now a 3% weighting for who? Weight of, I don't know what that last
S&P
part
probably, right?
What's that?
You bet it's S&P. Yeah.
Yeah, it looks like
it's right. S&P.
trying to be
There's an S and there's a P. And
yeah, it just didn't. It's now 3% weighting in the S&P. You want that first or me?
No, you take it because it's energy. You take it.
Yeah. So if the Fed cuts rates and if we get a boost, I think the Atlanta Fed GDP now is at about 3.1. Is that right?
Yeah.
Okay. So 3.1 with 2.9% inflation. If there is, he tried to put it up again. It came up the same way. I don't know why that's happening.
But he means S&P. S&P were the.
Yeah. You should spell it phonetically, Remo, but that's absolutely what it was. I think energy is going to end up being a really good performer for the end of the year and the beginning of next quarter. Because if we get rate cuts and if we have actual strength going into the winter. The summer driving season, speculators start coming in February. They don't actually wait anymore. Like the seasonality has gotten earlier and earlier and earlier. Luis, you should put that up because that's actually funny. S&P. So you were right, Jenny. So I like energy going forward. I'm looking like if we look at, you want me to put up a chart?
Sure, because Josh Young, our buddy from Bison Trading, has recently flipped pretty bullish on crude as well. So
I'm going to put up the XLE chart, Luis, if you can put that up when I get a second. I'm not necessarily allocating to it yet, but I will be shortly, and I probably do it about when we get to the end of the seasonal period, which is, again, middle of October. I'll start to add it. But if you look at this XLE chart, it's big. And we had, Mike and I cover percentage B buys, which is, it's sort of a Bollinger Band. I don't want to call it an indicator, but it's a Bollinger Band entry system that we use. And basically you got, what the percentage B is, it's the upper band minus the lower band divided by the lower band. That's how you get the calculation. And we put it on the histogram here. Here we got to drop below zero, and then here we got to close above that particular day. It's high, and that's a long signal for us. So what I have on the chart here for XLE is a breakout above this sort of consolidation area here. So what am I going to do, Jimmy? I'm going to let it pull back, and if it holds, I'm going to get in.
Pull back, right?
Yeah, if it pulls back and it holds, I'm going to get in.
Pulls back, so the rotation zone to pull back and hold?
Yeah, rotation zone is fine. It's really the top of the horizontal channel.
Oh, yeah, I see where it is, yeah.
Yeah, but if you look like where it comes in, it's right about here. And by that time, the rotation zone is probably going to move up there also.
We'll be there, right? That's
and I, you know, again, it's confluence. I don't change my size on a confluence, but a lot of people do. And I don't necessarily have a problem with that.
So tell me this, what if, is that last bar the one with the big wick? Right. Yeah. Okay. Because I was the one below it seemed.
That's
so what about a settle above the candle, the body of the candle, and then any strength beyond that in the next?
This one here?
Yeah. Would that matter to you at all?
That's today's close. So what do you mean? Tomorrow
so
is
let's say tomorrow's day settles above, like somewhere above the body of that green candle yesterday's. Yeah. And because the reason is because I wanted it to be above those other highs from, I don't know, 20 bars ago, whatever, right in there. A settle above there and then any sort of subsequent strength. Do you think the race is on then, or do you need your pullback?
The problem for me with this is you're looking, I don't know how to draw on here. Is there a place I can draw? I think this lets me draw. Nah, it doesn't let me. I don't know how to draw. The problem with it for me in that particular case is I'll run my mouse. You guys can see the mouse. This now is a very overextended set of moves right here. Yeah. Right? If we start to get that. Now, if I put an RSI down here, down in this area, it was probably oversold. Here, it was probably approaching oversold, and then it popped higher. If we get strength above here, it's probably getting into overbought. So I would still be looking for a pullback, but the pullback would probably be right around this area, Jimmy.
Yeah.
So, you know, a lot of the times we end up in at the same places. By the way, Tim said Josh is great.
So, yeah, we love Josh. Josh is a good guy, and he knows what he's doing too. Yeah.
Huh, also, we got to get Mike, the CNBC Mike. What is his name again? He's a friend of yours. Oh, I can't remember.
Mike Lee.
No, not Mike Lee. Different guy. That's okay. I'll get his name. He He was the moderator at the speech I gave in Las Vegas. So he agreed to come on the show, but he had agreed to you. I just can't remember his last name right now. Actually, I remember it, but I can't pronounce it.
Interesting. I can't think of who that would be. You want to call it? You want to talk one more topic?
No, we're good.
Yeah, we're good. Thank you guys so much for joining us. I love the input you guys give. Every one of you, that's just such good comments. Thank you. We're lucky to be able to do this with you guys as participants. This is, what is this name of the show? Tradier's the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Please also join us at the unfilteredinvestor.com. I tell you, I've been involved with Mike Arnold for a couple of years now. His system works. I gave a speech today for TradeStation, and I was going over some of the things, and I love, my favorite question is, why the 8 and the 21? Because they back us and they work. Okay. Why? It's not our job to figure out why something works. Our job is to make money and then to talk about making money. But thank you guys so much for joining us. This has been the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.